We're now at the point where Fred and Mary Smith have left the office. They dropped their job in. Remember, this is the truck driver with a partnership, and his spouse is in the business with him. So what happens is you go in to the client area and you're going to allocate the job to that client. Now, the client consists of three distinct entities. There's Fred and Mary Smith, the partnership tax return and financials. There's Fred Smith, the individual, and Mary Smith, the individual. In this case, then, there are effectively three tax returns. So what you would do is allocate it to those clients, and then you would allocate the job to that client. So year-end financials for Fred and Mary Smith, individual tax return for Fred Smith, individual tax return for Mary Smith. Now, what this does is it creates the job. When you back out of this step, you actually create the job, and the job will do several things. You can allocate it to an employee. It'll create all the steps necessary for that job to occur. If you think about a partnership tax return, there are certain things that need to happen when you do a partnership tax return. That's this process of control, making work papers available, etc. It also has a due date, which is the preferred date that the job should be completed. Remember, it's a network, so everyone in the office will now know that a specific employee has a job for these clients allocated to them and the sort of work that job relates to.